beautiful day. I don't know.
Larry, on the tariff.
I don't have any.
On China, 25% tariff.
The president was not satisfied with the progress of the talks, and he indicated in good faith, a very respectful note to President Xi that we hope to continue the talks in September. We hope their team comes here. But in terms of the progress of the deal, the president's not satisfied. Any consumer impact is very, very small, minuscule. By the way, consumer spending and consumer wages and salaries and consumer savings are all booming. It's the strongest part of the economy. So, that's the underlying fact. And I would also add, in economic terms, we believe, and we've looked at these numbers again and again, that the economic burdens have fallen most heavily on China. They've had to slash prices to try to compete. That has done damage to their profits in their companies, and their economy is in a very big slowing mode. There's also a lot of shift in production and supply chains out of China. It's doubtful that they'll get those markets back. So I think the impact has fallen very heavily on China, and our consumer sector remains strong. On the tariff point, it's a straightforward story. The team came back from Shanghai. We had a long meeting yesterday. It was a very good jobs report. People are flooding back into the job market. And in some of the numbers here, I tend to focus on the granular aspects. You've got something like 370,000 people entered the labor force. Last month it was 335,000 in ballpark. I hope I'm close to the truth. That tells me not only is the economy strong with a low unemployment rate, but because of the increase in salaries and wages and compensation, people are coming back. That's rare, but very, very positive. Our trade reform policy is designed not only for free, fair, and reciprocal trade, but to help all sectors of the American economy where there has been economic harm done as a consequence of unlawful trading practices by China and other countries. So we are, very sensitive, whether it's manufacturing, autos, farming, ranching, tech. We're very sensitive to that. Well, the Fed has ended their quantitative tightening. That's a big step in the right direction. And they did lower their target rate. And the money market is predicting additional rate cuts from the Fed. So that's a good thing. Look, our whole economy in the last 2 years has suffered from a severe bout of tight money. And it has not been helpful. Now that looks to be changing. And so our incentives from lower taxes and regulations, I think, will have an even bigger impact on economic growth.